Hola mi gente, so I get asked this question all the time. What is the best options trading strategy for a beginner? And my answer is always going to be the same. It's the one that's going to make you money. If you're new to this channel, my name is Sean, and this is We Are Investing, a channel that is dedicated in investing and personal finance. The true answer to that question is leaps. L-E-A-P-S. Leaps. Learn them because they will change your investing game forever. So when it comes to investing in the stock market, there's never a free lunch. But leaps are like coupons to help make that lunch a little bit cheaper. So that way your fridge is always full and you're never hungry. They'll also fill up your pantry and you'll be able to get some creatine because you're going to get some nasty gains with leaps. So what does a leap stand for? Well, a leap is a long-term equity anticipation security, meaning that you believe in the stock for the long term or a relatively long term because options do have expiration dates. As soon as I let this guy go, he's going to start meowing all through this video. It's going to drive me crazy. But what a leap is you buy a call option in a company, in a stock that you believe in for the next couple of years. Because a call option for a leap does not expire until at least a year. But most times it's multi-years. Hey, get away. Stop that. But most times it's multi-year because you're going to buy leaps that expire not 1 year out, but 2 or possibly even 3 years out. Right now, you can purchase leaps that are going to expire in January of 2024. So when you purchase a leap, you have to believe that the company is going to be worth more in a couple years than it is today. And that is the majority of stocks out there in the stock market. The majority of stocks are going to give you some kind of return on investment over the next couple of years. And that is why leaps provide a great way to leverage your money, but they're low risk because most stocks will go up over time. But not only do they lower your risk as an options trader and an options investor, if you want to call it that, they also allow you to leverage your money. Leaps provide great leverage, and with leverage, you can maximize your potential reward. But with all that being said, let's hop on over to the computer so that I can show you some real examples of why leaps are so powerful, how to buy them, and some leaps that I'm buying right now in companies that I think are going to go up in value.
A few moments later.
Alright, let's get nerdy with it. Let's actually do some calculations behind why leaps are such a powerful tool when it comes to investing in the stock market and are my favorite way to trade options. So what we're looking at right now is a 1 year, 1 day chart on Palantir. A lot of people are extremely bullish on Palantir. Just do a search on YouTube and you'll see all the people that think that this will be a $1 trillion company in the future. $1 trillion company when this company currently has a market cap of $53.62 billion would be roughly a 19x return on your investment if that is actually the case. But heading back to the charts, this is Thinkorswim, a product from TD Ameritrade. If you open up an account for TD Ameritrade, you will get this software for free, and it is the best software when analyzing and trading stocks. And it is a great way to learn how to invest and trade in the stock market. I highly recommend it. But heading back to Palantir, why leaps are so powerful? Well, let me show you in this video. Palantir right now has a share price of $27.47. If I wanted to buy 100 shares of Palantir at the current price, it would cost me $2,747. That's how much money I would have to put out right now to get exposure to 100 shares of Palantir. That's quite expensive. And I know a way to get exposure of 100 shares for way cheaper. And that way is through leaps. So we need to take a look at the options chain to see how leaps really work. Now I looked at this before. Let's take a look at this one right here. This is a call option at a strike price of $12.50 that expires in January 2023. We can also take a look at a call option that would expire in January 2024. It all depends on how much money you want to put out, but I really like this $12.50 strike that expires in 2023. If we take a look at this option right here, we can see that the last price paid for this option was $15.79. The bid is $15.60. So let's say we can get it at the ask price. Now, one call option gives you exposure to 100 shares. Now, if I wanted to buy one of these and get exposure to 100 shares, it would cost me $1,590. And my break-even price would be $28.40, which is just about 90 cents higher than the current share price. And considering that this is an option that will expire in January 2023, I'm going to say that's pretty much break even at the current share price, because a dollar over that kind of timeline is nothing considering Palantir, a stock that has been very volatile. So essentially with a leap, I get exposure to 100 shares for a fraction of the price. To buy 100 shares outright, it would cost me $2,747. To get exposure to 100 shares via a leap, it would cost me $1,580. That difference is $1,167. I can then use that money to invest in something else. I can buy shares, and at the current price, that would give me exposure to 42 additional shares. So with the same money, I can buy one leap, get exposure to 100 shares, buy 42 common shares. So my total exposure would be for 142 shares, as opposed to just buying the stock upright with common shares and only having exposure to 100. So I essentially 1.4x my leverage in Palantir just with leaps for a call option that expires in January 2023 at a strike price of $12.50, a break-even price that is essentially the stock price right now. And if you take a look at this chart and you're bullish in Palantir, the stock should be higher than it is right now in the future. If you are bullish on Palantir and the valuation is deserving of a higher share price. Now, there are risks associated with every kind of investment in the stock market. With leaps, there's an additional risk. And because of that additional risk, you get extra leverage. But that risk is well worth it, in my personal opinion. If we take a look at that January 2023 $12.50 strike for Palantir, and we say, let's analyze a buy trade, we're going to buy one leap option, and we're going to buy it at $15.90. What's our risk profile for that kind of trade? Well, if you look at this chart here, this is going to show you exactly what our risk profile is for this investment. So the absolute worst case for you with the leap option is if the stock is below the strike price at expiration. In this case, if Palantir is below $12.50 by January 2023, you will lose all of the money that you put in this investment. In this case, it was $1,590. The potential reward is unlimited, and your break-even point would be if the stock is at the current share price by 2023. So your break-even in this case would be if Palantir was at $28.40 on January 2023. Your reward is unlimited. The price can continue to go up, and you will continue to make money on this trade. If Palantir was to get back to $70 a share, your profit would be around $4,000 on this trade. That is going to be well more than if you were just to buy shares of Palantir. Because remember, with leaps, you get added leverage, and you can get exposure to 142 shares for the same price if you were to buy one leap and then common shares on top of that. What you can also do is buy one leap, wait for a dip, and then buy another leap. Just know that with leaps, there is volatility, and volatility is expected. Do not be afraid of the volatility, and use that volatility to allow you to buy more leaps. But know that there is always risk, and you need to be comfortable with the risk. On this TD Ameritrade risk profile,
It shows you exactly what your risks to rewards are. And if you're comfortable with that, then game on. Leaps are the way to go. Now, I told you guys I would show you leaps that I'm currently invested in. Now, this is based off my investment thesis. This is based off of my due diligence on these companies and where I believe their true value is. With Ford, I believe we will be above $16.45 in the future. In the next couple of years, I think we break that level. And I actually think we're going to start a rally in this stock right now. Now, if we take a look at this options chain, you can see that I have exposure via the January 2023 $12 strike. This is the call option that I have exposure to, and because of my leap option, I have exposure to over 2,000 shares in Ford. And if Ford was to pop off and go above $16 and break some kind of new high, I would make a ton of money off of that. If Ford is below $12 in a couple years, which I believe is unrealistic, then I would lose my entire investment. But that is a risk that I'm willing to take because of that potential reward, and I do believe in my due diligence for this company. And when the stock had fallen, I did add to my position. Now, another company that I have leaps in is Chewy. This is a company that I got into at around this point. I had a nice ride up. I did not sell my leaps because I believe that this company is worth even more in the future. I believe in the management, I believe in the sector, and I believe in the growth. This is a company that is going higher in my personal opinion. If we take a look at the options chain, you can see that I have leaps for January 2023 at the $80 strike. I believe that Chewy will be worth more than $80 by this expiration date. And I believe that they're going to be worth a lot more than $80. Taking a look at this chart, I think that we're going to see more than $100 a share. It's just going to take some time, and that's completely fine. Now, a strategy that I might implement on Chewy if the stock continues to fall is I might roll these over to a January 2024 option instead to give myself some more time, and I would also add to my position. That's one of the greatest things with options trading. You are not locked into your expiration date. When new leaps come out, you can pay the difference in premium and roll them over if you want to de-risk your position a little bit. It's a great way to manage your trade if things are not heading in the direction that you want them to in the time being.
Hey, that wraps it up, mi gente. I thank you so much for sticking around to the end. It's been a pleasure. I love talking stocks and options with you. And I also have a Patreon where there is a Discord server of over 500 investors where we talk stocks and cryptos every single day. It's a direct line of communication to me and other investors to help you grow as an investor and trader. Also included in the Patreon, I post weekly stock trades of options trades with high probability. Over the last 3 weeks, we have hit multiple trades that have been over 100% returns in just one trading week. As you can see here by the last couple screenshots, we have been making banks off of our options trades, and every single trade I post on the Patreon every single Sunday, we talk about the weekly trades, the trades that we're eyeing up for that given week. So join the community by joining the Patreon, join the channel by hitting that subscribe button, ringing that bell, and smashing that like button. I'll catch you guys on the next video. It's been real, it's been fun, it's been real fun. And this is We Are Investing, and together we are invincible. See ya, mi gente. Dale.